this is kind of for swing trading, talking a little bit about stochastics and MACD. You can also use it for day trading. I'm not going to go through every slide because a lot of the slides explain it, but I just want to go through a couple of charts and show you what I'm talking about there. And then I want to go through a couple of resources that I use on the internet for swing trading. We'll go over the Eurobox play, and I think that's really about it. Oh, and the price breaks. Okay, and I think this will be a good amount of material, but it'll be easy to cover. So what I want to show you with this chart, okay, a lot of times now I'm going to talk about this kind of on a swing basis for those of you that are swing traders, but this will also help you for looking at intraday charts because you can drill down. I guess one of my areas or specialties is determining kind of intermediate to longer term market direction. A lot of people ask, okay, how do you do this? This is what I do. It's really simple. It's just using some tools maybe a little differently than maybe they've been taught. First of all, it's just these are all default things. It's a default stochastic, default MACD. We've got the squeeze indicator, and then a 7-period RSI. Can you guys see this okay? Or should we close the screen or anything? It's all right? Okay. So what I'm looking, and then these moving averages are just the key moving averages that I use. You got the 8 and the 21, and then you got the 50, the 100, and the 200, and I'm using the EMAs, okay, exponential. So what I do with this on a monthly chart, okay, first of all, to me the stochastics is pretty much worthless, okay, but I do have a specific use for it. I don't care if it's overbought, okay. If you get a stochastic that's overbought and decide to go short just because it's overbought, you'd have been in a world of hurt here for 5 years. Okay? So anytime you hear somebody going, oh, the stochastics is overbought, just totally dismiss it. However, how it is useful, it is a heads up for the MACD. Okay? And that is the only reason I use stochastics. So I'm interested in the stochastics giving me a heads up that the MACD is going to change course. Okay? So you can see here, we got a MACD buy in 1995, and that stayed in a buy, except for a little blip there, until about March, April 2000. All right, so my rule of thumb with this is that I'm looking for the stochastics to kind of give me a heads up. Okay, oh, the stochastics crashes here. You get a little monthly sell right here, but it goes right back up again. And you can see here stochastic will cross first, and then the MACD. So the stochastic is a heads up for the MACD. MACD is pretty much the confirmation that a trend has taken place and change in the markets.
Is it a monthly chart?
This is a monthly chart. All right, so this is the squeeze. Now look at this. In the last 15 years, there's only been 3 monthly squeezes. Okay, monthly squeeze. If you're just waiting for the monthly squeeze, might be waiting a little while. And then the RSI, I'm just looking for divergences. Now I'm going to show you more divergence examples. All right, so how do I use this? To me, trading is all about trading in what I call the same direction as the market pressures that are currently in place. Okay, so I'm interested in where's the market pressure. All right, so where's the market pressure? Right here, you can see from 95 to 2000, the pressure was on the upside. Okay? The nice thing about the monthly charts is that you can have these huge sell-offs of 50 or 100 points in the S&Ps, and the monthly chart doesn't even touch it. Okay? So the monthly chart is how you get your broad-based view on the market. Are we bullish or bearish on a monthly chart? Okay? And by doing this, what happens? A lot of people were asking me a couple of weeks ago, why when the market was selling off, I was still bullish on the markets. It's because the weekly charts at the time had the most bullish setup I'd seen in like 3 or 4 years. And the most bullish setup you can ever get is a stochastics that has turned higher and is either overbought or almost overbought, and a MACD that's just turning higher. Okay? Anytime you see that, whether it's on any time frame, actually, it's one of the most powerful setups that there are. I don't trade that intraday. I will trade that on 60 minutes and above. All right, but I'm really more concerned about these on the monthly, the daily, and the weekly charts. Okay, the most powerful moves in the market happen when all 3 time frames line up, but it's a rare thing. So right here on this particular time frame, you're looking at the monthly chart, and it's bullish. You got the MACD crossing higher. Yeah, stochastics is overbought. I don't care. And nothing happened on the squeeze, and there's that. So how I start off my trading day, or usually on Sundays too, I just open up the monthly chart, gives me a quick bird's eye view of the markets. All right. From there, I just drill down, and I do this on any index I'm trading. This is S&P cash, but I'll do this on. Now remember, if you're looking at like the monthly charts, if you're looking at the Dow futures monthly chart is only like a couple of years. The Dow futures only been trading for 3 or 4 years on the minis. So what I'll do is, like if you're looking at the Dow, just look at the Dow cash. I mean, you're looking for what the pressures are anyway. All right, so then I'm going to drill down and look at the weeklies. Okay, so you can see on the monthly charts we had a bullish setup. On the weeklies, we have here a stochastic that's high and a MACD that's just turning higher. A squeeze that fired off short and has now lost momentum. And an RSI, there's no divergences at this point. And then just continue drilling down to the daily. On the daily chart here, stochastics overbought. You got the MACD turning higher. Nothing on the squeeze. And kind of interesting here on the RSI is that you've got, I'll show you some divergences, but you got a very slight bullish divergence there.
What date is that chart?
These charts, I believe, were taken November 2004. And we can look at like current charts too. And then you can just drill down to the 60-minute chart. 60-minute charts in a squeeze, and so on and so on. So I'll use that to get kind of a, just a bias on the market. Now, right now, the market, the monthly's in a buy, the weekly's in a buy. So what happened a couple of weeks ago, the dailies went into a sell. And if you guys remember the swing trade where I talked about, when the weeklies are pointing higher, look for the turn in the dailies after the sell-off. That's just what the stock indexes did, okay, a couple of weeks ago. Now we got the Russell at all-time highs for the year. Brokers are at all-time highs ever. Different things like that. So it's important that when you see stuff like this, so that when there are sell-offs in the market, you don't get chased off, because you kind of get a better feel of what's going on there. Okay, the other thing I like to do is look at key Fibonacci levels. Okay, this is a monthly chart, and I want to know like where the dead highs were to the dead lows, where we are. Now this is back in November. You can see that when we came all the way back up to about 1156, 1155, that was a 50% retracement. What happened? This was a big resistance level for a long time. But then I know is if we can get a decent close above this on the monthly chart, then we're going to shoot up right next to the next level. These Fibonacci's on the monthly charts are hugely powerful. Sometimes on a 5-minute chart it may hold, it may not. On a monthly chart, they're kind of a force to be reckoned with. Then I'll drill down and look at the most recent high to low on the weekly and just do the same thing. I want to know where these key numbers are. And so what will happen is, even though I'm doing a lot of this stuff intraday, there's going to be some times on intraday when these key Fibonacci's like on a weekly chart line up with a pivot or something like that. And on those days, it's just kind of a gold. I mean, those numbers really hold. And when I get to something like that, I'll actually double and triple up on size at those levels for a day trade.
When Fibonacci coincides with the pivot line?
I caught 3 words. What? I caught size and pivot lines.
And Fibonacci.
And Fibonacci.
Coincide.
Yes, coincide.
Good.
Gotcha. Okay. And then same thing with the daily. I'll get the key levels on the daily, and then again, I just want to know the next day when I'm looking at the pivots, just see if any of these things are lining up together. And then you can also just drill down to the 60-minute. I do like these on a 60-minute. Below a 60-minute, I'm really not interested, because below a 60-minute, I'm really focusing more on the pivots anyway. The other thing is just very simple stuff. These trend lines are hugely powerful on the monthly and weekly and daily charts, not only in futures, but especially in Forex. Okay? Forex is the most technical market out there because you don't have other internal indicators that you can use, and everybody's using trend lines and things like that. So I just want to know, are we in an uptrend? Are we in a downtrend? And where are these levels? Okay, and you just drill down, go down to the weekly. Where are we on the levels there? Go down to the daily. Where are we on the levels there? And what I do is somebody was asking, what is your routine before you start trading? This is what I do. I just want to go through and just kind of get a touch base. Where are we breaking through any trend lines? Are we near any resistance and different things like that? Just pretty simple stuff, and it gives me a good feel of the markets. 60-minute chart. The 60-minute chart tends to trade in a nice, neat little channel like that.
And how did you determine your resistance there? Was it the trend line or was it the fib?
Which on the previous one?
Yeah, I think you were. What were you doing Forex?
Oh, what I'll do on Forex. Okay, now that's not a Fibonacci. That's just a previous resistance level. But on Forex, if you've got the Fibonacci's and then the trend lines against it, the trades that I'm most interested in are where the trend lines and the Fibonacci's come together. Okay, and I'll fade moves to those levels, or usually both ways.
Thanks, good. You always take your numbers off the cash?
No, actually, no, that's a good question. On this one, just for sake of consistency, it's on the S&P cash index, but I just do it on whichever one I'm trading. If you're trading the futures, generally on a monthly chart, you're going to have to use cash. Not on every futures contract, but on some of the newer ones. Generally, though, from weekly on down, you can use the actual contract that you're trading. Okay, that's 60-minute. Okay, I've kind of just talked about this. The point of all this is you can put together a little chart and just kind of see where, I'll show you here. The whole point of doing this is I can go through this in 15 minutes and I'm looking for confluence, okay? Are we coming up next to a trading channel that also lines up with a key moving average that also lines up with the Fibonacci level, okay? That kind of thing. So, because what will happen is I found is that on a swing term basis and on a day trading basis, the highest probability setups tend to happen when you get a confluence of different things coming together. So all you got to do is, like, if you're just trading the Dow, before the trading day comes up, you just look at a weekly chart of the Dow futures, where are the main trend lines, drill down to a daily, drill down to a 60-minute. Takes 5 minutes, jot down a few key levels of the day, and what's going to happen now is if you get a big move that day and everybody else is freaking out, you're like, oh, we're coming right down to this level, okay? It'll give you a big edge over other traders who are so caught up in the minute-to-minute happenings where you can sit back and fade that stuff. And it just helps me in terms of like directional bias for the day.
So John, you're doing this with the cash index, and you're going to try to translate that to a futures equivalent?
This one is just, it shows the cash, but if I'm doing, what I do personally every night is I will do this on the Dow futures, S&P futures, NASDAQ futures, and Russell futures.
And Forex?
On Forex, I'll do it on the 8 major currency pairs that I trade. And it takes 15 to 30 minutes a night, and it just gives me a good feel of kind of what the market's doing and where it's going. Now, and I'll know all that stuff, and you don't have to get too, because a lot of times these key levels come together. Maybe like in Forex, you got 1 or 2 good levels a week that are going to be coming up, and I'm just sitting there waiting for them. It's like I know what's going on, and I'm just sitting there waiting for those levels. I just talked about, like on the Swiss, we were looking for the Swissy to break up through 29.50, and when it did, it went straight up to 30.62, like 112 pips. It was a level that I've been waiting for a long time. And again, this is just kind of a part of a routine, either done before the market opens or especially on the weekends. Weekends are kind of a big researching time. The things I like to look at, the first thing I do is I just do what I call the top-down approach, monthly, weekly, daily, 60-minute charts. Got my key levels down. Okay, what else do I look at? What I like to do to kind of keep everything organized is I'll just kind of put it in a window like this, okay? I've got the Dow, S&P, OEX, and you can do this with the futures or the cash. And then I always like to know what the banks, brokers, and semis are doing, retail, technology, and then I always like to follow these 3 stocks. IBM, GE, and Merrill Lynch, very big stocks, a lot of following. And what happens here is when you drill down to stocks like that, you'll be able to get clued in as to when market breaks are going to happen. Okay, so how do I use all this? Those charts that we looked at, the stochastics, the MACD, the RSI, and the squeeze. So what do I do here is I'll just say, okay, the Dow on a monthly chart, the stochastics is in a sell. In the weekly, it's a buy. Daily, it's a buy. MACD, the monthly's in a buy, weekly's in a sell, daily's in a buy. And so on and so on and so on. What happens then when I fill all this out is I just have a blueprint of what the market's doing. And this is how I can find market turns. Because what's going to happen here is that usually when the market turns, you're going to see IBM, GE, and Merrill Lynch all start going red first. Then you're going to see the sectors. Then you're going to see the indexes.
And the squeeze N, R?
Squeeze, oh yeah, N is neutral, means nothing's happening. R means there's a red dot. And B here means that the squeeze fired off and it's a buy. Okay? What we're trying to do is actually get all this automated, and I'll include it in the newsletters. And so it's just, it's about an hour's worth of research a night, and then just trying to keep it updated that way.
Stochastics and RSI just mean they're rising?
Yeah, the trickiest one of all these is the RSI, because what I'm looking for, is it in a buy, is it turning higher, turning lower, but I'm not as interested in an RSI on that as I am any bullish and bearish divergences. And that's the main thing I'm looking for, and I'll show an example of that. Sure. Okay. Squeezes again. N just means by neutral. I just mean that there's nothing happening on the squeeze. It's got just the dots that are going off, and there's nothing happening. And red dots again means now you're in the squeeze, and V would mean that it's fired off and it's a buy. And the cool thing here is too is that you look at S is a 60-minute, by the way. So you got a 60-minute, a daily, and a weekly chart. And by doing this and by glancing at this, you've got an instant idea of what's going on in the markets. You'll see these things fire off first on the 60-minute chart, then the daily, then the weekly. Okay? Make sense? Any questions on this? It's an easy way for me to organize a hell of a lot of data and just look at it at a glance. And I try to do this in the newsletters that I write, have this format, and now it's just when I get settled in Austin and stuff like that, we're going to try to find a way to computerize it and keep it updated like real time. Okay? The other thing I like to look at every day is just volume. And what I'll do on this, and you can do this with the S&P futures volume as well too, the main thing I'm interested in is the up-down volume and then the total volume. Now the total volume, how did that compare to the day before? And then the total volume, how does that compare to the 50-day moving average of the volume? Okay? Have a safe flight. The point of this is that if you ever see markets trying to make new highs and the volume is lower than the day before and lower than the 50-day moving average of the volume, you've got a breakout that's not going to last. And I just want to know that. Is there real volume coming into the market? At a glance, I can see whether it is or not by doing that. The other things I like to look at, sometimes it's not that easy to tell, are the S&Ps in an uptrend or a downtrend, or are they trading sideways? There's a real easy way to tell, and this is what the guys on the floor do as well. You look at today's closing price and then the prior 3 days. If today's closing price closed above or closed below the prior 3-day highs and lows, you're in a trending market. Okay? If today's closing price is in between the prior 3-day highs and 3-day lows, you're in a trending market. Guess what? You're not going to have as many trading opportunities. I'm sorry, not a trending market, a consolidation market. You're not going to have as many trading opportunities in a consolidating market as opposed to a trending market. Okay? Yeah, like if you have I don't have a chart. You just look at a regular daily bar chart. Here's today's bar right here, and you've got another bar. Here's Friday, Thursday, Wednesday, Tuesday. So Friday's close, you want to see, is it within the range of the prior 3 days, or did it actually close above or below the highs and the lows of the prior 3 days? Okay? If it does, you're in a trending market. If you catch it on the first day, you can catch a trend that may last 3 to 5 days. If it's not, it's a consolidating market, and there's no reason to be too aggressive in that kind of an trading environment. Okay? Really easy way to tell what kind of market you're in. The other thing...
Just closes though. You're not interested if it breaks out because like anything.
Yeah, because that's a good question. I am looking at the... I want to see if it... for example, if on this day it moves above the prior 3-day highs but can't close above it, then that means it's still in a consolidating range. Okay? Yeah, it is the close. The other thing I want to keep track of, this high, the low day, and all that stuff, I'm going to cover next, so I'll skip that right now. But I do like to know where the key gaps are on the futures markets. Okay, and I will jot those down and track those and see where we are. Okay, so what I'm doing with this here, there's a ton of data here, all the data you could ever want. There's only really a couple things I'm interested in here. Okay, if we go through the site here. The first thing I'm interested in is these different indicators, and he's just rearranged his site about a couple weeks ago. But you can see we've got, so the first thing I want to look at is, okay, ARMS index. The ARMS index is the daily trend reading. So what we're looking at here is, oh, there's the ARMS. Oh, the 10-minute bars, hold on. Sorry, what?
Don't you have that already in TradeStation?
Yeah, but I'll show you why I like looking at stuff on here. I mean, these are all things, all the indicators are on TradeStation, but the way the guy does this, okay, like here's one of my favorite indicators. This is the New York net buy and sell numbers. Okay, so what does this mean? If you look at this here, this shows, that level right there shows that in October 2003, the NYSE members were net long 500 million shares of stock. Okay? The specialists on the NYSE make money year in and year out. The only reason they're going to get long a bunch of stock is because they have the expectation that they're going to be able to distribute that at a higher price sometime later. Okay? They're like Walmart. They're buying goods cheap and trying to sell them more expensive. They load up here in October. Boom, we start rallying. You can see here the red lines where they're starting to distribute inventory. Market goes back lower. Boom, they load up again. They're sitting on it here for a little bit, and we get the next rally. The biggest rallies I see in the market ever are when the NYSE members load up on all this stock. Okay, it's a great indicator. And you can see here, March 2003. Look at this. Okay, we got bottom, 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 up. This was the largest, at that time, the largest amount of net buying done by the NYSE members. And look what happened shortly thereafter.
That spike looks so large, it looks like an aberration.
Yeah, they were pretty determined. They had a high expectation that the market was going to go higher at that point.
Does it applies only to S&P or also?
Well, this is the NYSE. This is all the stocks that trade on the New York Stock Exchange. So S&P 500, Dow. I mean, it doesn't matter. Okay. Yeah, I mean, you're going to see as we're coming up, what's kind of interesting right now, you can see we're rallying. Let's look at what's happening right now. Okay, we're rallying, we're near the highs. What's happening? They're distributing inventory. All right? So you just kind of wait. Now, the catch on this is that it's a couple weeks delayed. All right? So you're not catching it like real time what they're doing. You're getting this is swing and position trading. So right now they may be turning around, getting net long again, but we're watching this when it comes out and it's updated. Okay? So that's one of my favorite things to look at. The other thing I like to look at is the 10-day moving. We were talking on the first day about the put-call ratio and how to use that on swing trading. Well, you just look at the 10-day moving average of the put-call ratio. Okay. Remember what I talked about when intraday the put-call gets over 1? What's happening? You got a lot of people short. So at this point, you look for the market to kind of bottom out and turn around and go higher, and vice versa. All right. So down here, you can see where the put-call is over 1. Okay. On a 10-day moving average, over 1, bottom, or close to 1. Over 1, bottom. Over 1 there, bottom, little rally. We just recently hit 1 when we pulled back, and we've been rallying ever since. The reverse is also true. If it gets under about 0.70, you get tops. 0.70, everybody's bullish, boom. Up here, nice rally, everybody's bullish, boom. Up here, everybody's bullish, boom. Okay, great for swing trading. I always want to know what the 10-day moving average of the put-call ratio is. Of course, a lot of times this is neutral, so I'm looking for those extreme readings. When I do get these extreme readings, I pretty much load the boat.
You can't get the 10-day moving average of the put-call ratio on TradeStation?
Yeah, but this guy does such a good job. You can get it on TradeStation.
He puts it all together.
Yeah, I mean, this is like, for 20, I'm paying this guy $20 a month to put all this together for me, kind of a thing, which is great.
On the net buys and sells,
Uh-huh.
did you say it was 2 weeks delayed?
I believe it may not be that much anymore. It was for a while, but I think now they're trying to get the numbers a little bit earlier.
So you can get this on TradeStation, can you? Or?
No.
No.
It comes in Barron's. This guy gets them out of Barron's and puts them on a chart. This morning, David at the CME was talking about investors' intelligence numbers. Let's see where they are right now. Okay, so right now we're actually getting a little bullish here. We're at 60% bulls, 58% bulls. Oh, 14% bears. Wow, that's pretty good in terms of how high it is. I mean, that's a little toppy.
Is that a contrarian?
Yes, exactly. So, okay, look at this. 1991, we had a big crash. Everybody got bearish. Rally. Anytime you get extreme bearishness, rally. This is March 2003 bottom. I found extreme bearishness works more as a bottoming indicator than extreme bullishness. Extreme bullishness is more of a heads up. And I'm going to show you how to, when you get extreme bullishness in these things, how you take a setup on that. And I'll show you that on a chart. So those are really the main things I look at on there. I mean, if you're a technician, you'll have a field day with what he's doing. Here's the other thing I like. Okay, to me, this is the coolest part of his whole thing. Okay, so let's say brokers are breaking out and it's the strongest index, and you want to set up a swing trade. So if brokers are breaking out and they're the strongest index, why not buy like the top 3 strongest brokerage stocks? All right, so you go here, go to brokers, and he's got all the brokers that make up the index listed in order of relative strength. So Ameritrade Holdings has the strongest relative strength of any of the brokers, then Legg Mason, then E-Trade. Conversely, if you're looking for a short, let's go find the turds and short them. Here's Merrill Lynch, here's Goldman Sachs, here's Morgan Stanley. So they're the 3 worst performing brokers in the brokerage index. It's kind of ironic because I have a lot of people going, why are you so bullish on brokers? These three guys are doing nothing. Well, there's other brokers out there, and boom, there you go. I think that's just an incredibly useful tool. Semiconductors. Let's look at internet stocks. So, whatever you like to trade. So you got, and sometimes it gives you new trading ideas for stuff you haven't seen. Now, you get something like this, see beyond, it got whatever, takeover, whatever it is, so you throw that out. But Red Hat, okay, the top relative strength stock, Open Wave Systems, E-Trade. Of course, E-Trade's also a broker, but some of these kind of cross back and forth. To me, this is great. This is like one of the best sources of trading ideas for me. Let's look at, is there any other sectors you guys want to look at? Oil?
Relative strength, is that on the past few months, a quarter, a year, or just?
It's just relative strength right now compared to just what it is. So if it's relative strength is, whatever, 70, and it's the highest of all the other ones, then it's going to get ranked first. And it's in relation, to all the other stocks in the brokerage index.
PMO mean, John?
It's a price momentum oscillator. Kind of like a MACD. So if you go into oil stocks, you got Amarinda, Marathon. So you got Unocal with the China takeover. So you got some names in here that are at the top of the list. If you're bearish on oil, come down here. Look at ExxonMobil, Kerr-McGee, Chevron, things like that. One sector I like to look at is housing. If housing's ever going to roll over, who are the turds here? So you got these guys are on fire. Let's look down here, see if there's any turds. So, yeah, you got a couple of them down there. Let's see, what other sectors are there? Let's look at banks. Okay, again, throw out the ones that get taken over. So you got Golden West Financial, doing great. North Fork, I thought that was different. I thought that was spelled, kind of looks funny there, doesn't it? Northern Trust Company, that's been on a tear, and so on, okay? So if you're a swing trader looking for trading ideas, it's a very easy way to find stocks to be in, okay? And you can find stocks like this, use the 812, 821 EMA crossover and things like that. Also a good way to get a feel of the market. There's a ton of other stuff on here, but that's really all I use it for. If on the weekend I'll go through and look at some of this other stuff, but that's the main thing that I look at. Okay, so this is a chart I want to show you guys. This is a great example of when the market is, say if you're really, if you got really good bullish sentiment readings and it's getting you bearish on the market, well, when do you get in? You don't just short it because it's too high. This is one of the best short setups on the indexes out there, and the reverse is also true for swing trading, all right? First thing I'm looking for is with the 7-period RSI, I'm looking for a divergence. Market is making higher highs. RSI is making lower highs, okay? And I don't look at this and say, oh, maybe that's a divergence. It's smack you upside the head obvious. Here you got the Dow making higher highs, higher highs, higher highs. RSI making lower highs, lower highs, lower highs. You can draw the trend lines. It's very clear. All right, so when do you get short? If you get short at the first divergence, you're taking some heat. Oh, you're excited, taking some heat. What I do with this is then I plot the 8 and 21 EMAs on here, and I just wait for the crossover. When they cross over, and we come down and cross below it, just like the stock play, I then short the first rally back up to the 8 EMA. Okay?
John, on a 60-minute, how long?
Okay, so what I do with this is once I'm in the play, the main thing I'm looking for is what's my exit point. Typically on something like this, I'm going to look for a 50% retracement, but here's an easy way to get out, okay? Let's go to, is this it? Yeah. This is a great way to get out of a play that you get into on a larger time frame, okay? You get into a trade on a larger time frame on a divergence, then you can get out of the trade on a divergence on the next time frame below, okay? So we just got into a short on a daily chart divergence, so guess what I'm going to get out? Here's the break. This is the same move. We're breaking down, breaking down, breaking down, up. We're making lower lows. Now we're starting to get a bullish divergence here on the 60-minute chart. 8 and 21 EMAs cross, when they cross higher and price breaks above it, get out. Make sense? I can go over it again. I'm going pretty fast.
I was looking for the page, so I think what you said is the opposite divergence on the next lower time.
All right. So remember, when we got in on a daily chart with an 8 and 21 EMA that crossed lower after the divergence. So that's my entry point. to get out of the trade, okay, what I'm going to do, I'm just going to look for a divergence in the opposite direction on the next time frame lower. So we got a 60-minute chart. We're going lower, lower, lower. Now we're starting to get a bullish divergence. We get the cross above the 8 and 21 EMA. I'm out. Okay?
What about the stop on that?
On these plays like this, once we get below, let me go back to the daily. Pretty easy way for the stops. When I get into the trade here, I just go back 3 bars, 1, 2, 3, and look for the high bar, and that's this case, and that's where I put my stop. Yeah. You can trail it if you want, but you don't really need to because you're just looking for a divergence in the other direction. All right, so what I want to show you guys now, go to page 385. This is actually one of my favorite currency plays, by the way. Hope and Lope. And I mean, hope and lope is easy. Hope just means high the low period. Lope means low the high period. And I just want to go through some of the more recent examples. Very simple. It's a pure price chart, which, on Forex, that's about all you got to work with, right? So pure price chart. Now, I say Forex, but you can do this in any market, and I think this is a nice way to catch. The whole goal with this play is to catch turning points. So you're looking for a market that's already been trending higher. And what do you mean by trending higher, John? What I mean is that I'm looking for at least 20-day highs, okay? Not a market that's rallied for 3 days. I want to see that a market that's been rallying and is now at least 20-day new highs. It could be more than that. If it's going lower, I want to see 20-day new lows. So, okay, so what do I do there? So here we go. We're up here. We're at 20-day new highs. And now what I want to do is I want to go short on a break below the low of the high day, or depending on the time frame, the high period, okay? Now, it always sounds a little confusing, but here's the high day, okay? 20-day high. There's the high day. So on a break below the low of the high day, I'm going to go short.
On close.
On the now, that's a good question. You can do close or intraday. You can do both. What I will do is, if I'm doing it intraday and it closes back above, I just have to get out. If you do it for getting into the trade. But to get out of the trade, I always wait for the close, because a lot of times you're going to get a fake out and it's going to come back down. All right. So my entry here in this case is we go below the low of the high day right here, get into the trade. Since we close below it that day, I can stay in it. Okay. If it would have closed back up, I would have just gotten out. Where's my stop going to be? My stop's going to be just a few ticks above the high bar. Now, how do I get out of the trade? Okay, I just use a 2-bar trailing stop. So we get in here, and my first stop's going to be here for the first day. And then the next trading day we're here, so I go back 2 days, there's my stop. Next day's here, go back 2 days, there's my stop. Next day's here, go back 2 days, now there's my new stop, and so on and so on. Now I'm waiting for a close above that level, okay? An intraday move above that level, I'm not out. If it then closes above that level, I'll get out at the end of the day. Okay, does that make sense?
Closes above what level? Closes above where you're...
My 2-day trailing stop. All right, so you can see here, now right here, you're looking at some consolidation. We come down, okay, like right here, okay? Here's this bar. Where's my stop? Right here. Here's this bar. Where's my stop? Right here. There's this bar. There's my stop. Here's this bar. Here's my stop. We go above it, but we don't close above it. Okay? So this bar, here's my stop. This bar, here's my stop. This bar, so on and so on.
Well, that's a good question. Do you move your stop up on that bar?
That's a good question. I'll leave it. I mean, if in that case, yeah. I mean, if you're here, there's your stop, and now you got a lower bar. I mean, in that case, yeah, you can just leave it. And so it keeps going and going and going. Finally, we close above the previous 2 days and so my exit point is right there. And that's the close above as opposed to the little fake outs here.
So you basically close it at the end of the day, right?
Yeah, it's 4 o'clock. The futures are open until 4:15. If you're trading that, you're out.
So how long were you in that trade?
This trade lasted, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 23, 24 trading days, so you're talking a good month and a week.
Do you find this trade works better with the oscillating markets like the indices than the currencies, because the currencies tend to trend And a lot of times, the low or the high day, you know, you're just going to reverse and go back higher.
That's a good question. I actually found this market, to answer your question, no, I haven't seen a difference. To me, in currencies, this is like the great. I mean, it's an awesome trade. I mean, we just did one off the daily when a couple weeks ago, and end of June, pound sterling cross spiked down, closed above the high of the low day, caught 200 pips in it. I mean, this is an $18 or $19 a pip contract, and you just trail it.
You think of currencies as trending.
Yeah. So.
Now, given this is a swing play, how many contracts are you risking or putting on per $100,000?
Oh, good question. For a swing play, see you later. Have a good, safe flight. For swing play for me, I like in something like with Forex and stuff like that, I'm doing one per $20,000, and with futures, one per $20,000. Okay. So that's 5 contracts per 100,000.
I think you said something earlier that you would risk more on the Forex trades.
Well, okay, let me clarify. In my own account for Forex, I'll do like one per $5,000, but for the managed funds, I'll do one per $20,000. If that, and that's, you know, that's kind of, I always try to do a little bit less volatility in any funds that I'm managing than in my own like that. For Forex, in part of my futures is for my account that I'm using, like monthly bills and stuff like that. I'm looking at, you know, six contracts per 100,000 for my day trading. 5 per 100,000 for any swing trading. Forex is kind of like, since Forex is so leveraged, I'm willing to do a smaller account in Forex and really push it and see. I'm willing to, that's like, you know, if I'm willing to lose, say, what you can do is like, say you take $100,000 and you're willing to lose 20%, you just take that $20,000 you could lose, stick it into an account, and just see what you can do with it, kind of a thing. Okay, any questions on the setup? We'll go over another one. Now, you can use this just with price, but obviously if you've got like bearish divergences and bullish divergences, you're going to get kind of more of a heads up that something's going to come into play too. Here's another example here. You know, we got 20-day lows. So, you know, here we're at the low. So here's the high of the low day, okay? We can't close above it. We can't break through it. We can't break through it. This becomes the new low bar, okay? So now here's my new buy stop order, all right? So you're trailing the buy stop as the market's making new lows. So now we got here's a new low, all right? So guess what? Here's the new buy stop level. A new low, here's the new buy stop level, okay? Boom, next day you get filled, 2 bars trailing stop, and you're out here. Okay, so you got a nice bottom on the NASDAQ, boom, you're out 45 points later. And this was 1, 2, 3, 4, 5, about 2.5 weeks. Okay, so for me, this is a good way when you've got a runaway market to the upside or a runaway market to the downside, a good way to look for entries like that. Now, what I'll do with runaway stocks like Google is I'll do the same thing, but I won't do it on a daily chart, I'll do it on a weekly chart. March 2000, you had tons of stocks breaking below the low of the high week, and that was the first technical sell signal that you had in that, in 5 years.
And you'll take these in the bonds too, right?
Yeah, any market. Here's another let me find another market here. Bonds. Same thing. Make new 20-day lows. You put your first buy stop here, up, new low. So now the buy stop goes here. Boom, you get filled, trail the stop, and you're out there.
Lows and lows.
Lows and lows.
If you get a small range doji at the top, would you use that, or is that just too?
I don't take into account the candlestick pattern for this play, but there's
because there was a previous one. Can you just go back to a previous?
Oh, sure. But I mean, I do like the fact that, you know, this is like more of a hammer candlestick. It's a little more bullish. Right. You know, something like that. When you see a bottom, you got a better potential chance for this one or the previous one.
The previous one.
And how did you catch the largest moving cable ever?
Because there's a
high low day.
Just before the number one.
So the largest moving what?
Oh, this one?
He ended up catching all the largest moves in cable.
Oh, right there?
Yeah.
Okay, what's the question?
You broke above the high of the low day there.
Oh, this wasn't a new low. These lows were exactly the same.
Supposing that I made a slightly lower low then.
Yeah, then that would have been the buy stop.
That would have been a buy.
Yeah.
How many pips did you catch in cable using this?
650 about 3 weeks ago.
How much money is cable a pip?
$10. So yeah, $6,500 a contract.
This is like Linda Rashi's first.
Yeah, and Turtle Soup will do, actually, it looks for 20-day highs and then potential like fade that. Kind of the same thing, except giving you a specific entry on that. Google.
This is a weekly.
Yeah, this is when it first came out, so we didn't really. A weekly chart was like 1 bar, but you get the low day, boom, you trail it. I mean, you catch a good chunk of that move. Right now, I'm waiting for a close below the low. It did actually get a close below the low of the high week a couple of weeks ago, and then reversed and went back higher. Generally, on stuff like that, in a real powerful stock, you'll actually get into it a couple times and get stopped before you get the big, kapow. I mean, it may go to 500 because it's worth that much. Tizu. Now here's an interesting one. You get in, you get this nice move. I mean, you're almost 100% gain, but then the break on a close, you get killed. Now you're still catching a nice move here, but this does happen once in a while. In my experience, I've found that it's worth it to wait for the close because otherwise you get shaken out of a lot of good moves. But once in a while, you're going to get something like this. Now, if you're watching this intraday, I mean, you can panic and get out and be right that time. But most of the time, I'll wait. This is a nice stock, a transportation stock that we played. Boom, catch it. You're out here. It misses this move, but you catch a nice little chunk of the move there. Okay, any questions on that? It's one of my favorite setups, especially in currencies and in trying to catch swing reversals in the Dow and the S&P and stuff like that.
So it's one of your favorites, like how close to the top would you put it? For
swing plays, well, no, that's a good question. My favorite plays, if I'm doing swing trading on the indexes, it's kind of using this in combination with the 821 EMA crossovers. Okay, we just bought the two things that I'll do is on an up like the Russell. We just bought 662 on the Russell because it pulled back to the 8 EMA. Okay. Now, my exit strategy for the play is I've got an open target, and I'm just going to start using a 2-bar trailing stop. So even though I got into the trade a little bit differently than this, I'm using the same fundamental strategy to manage it. And then the other way to do it is if I think the Russell's getting too extended, it's making this is just a pullback. So if you're in an uptrend and just getting a pullback to the 8 EMA, I want to buy that pullback. But if I've got something that's going on where I see bearish divergences, okay, the market's making higher highs, but now we're getting bearish divergences, this is what I'll use to get into that trade. This is one of the methods I'll use to get into that trade. And you can use it just on price too. So it's kind of like this, and the 821 EMAs are my favorite way to use that. Okay?
EOD trades start at 3 p.m. You start looking at 3 o'clock. It's an end of day trade, all right? So the market's got to be trending though in order to do this. So like right now, it's not the best time in the world to do it. 3 p.m. Eastern close. If the bar closes lower than it opened and it's red, you go short the close. I use the TTM on this thing, okay? So believe it or not, the bar can close. Believe it or not, the bar can close actually higher than the open, and the color can be red. Or it can close higher than the open and be blue, okay? So at 3, you can use 3 or 305. There's the percentages on the back testing and actual trading it. There's like anywhere from 8 to 18% difference depending on what the market's doing. If you go at 3 or 305. So just messing around with it a little bit.
Is it a 5-minute bar?
Yeah, 5 minute, yes. I think it's 5 minute. Yeah, it's 5 minute. All you have to do is, it's the same thing. The way I scale out of stuff, I use the same entry. If these two conditions are not met, I don't do it, okay? So the two conditions are, if the bar closes at 3 o'clock, did the bar close higher than it opened? Yes, it did. Is it blue? Yes. Then that's a long entry, okay? You got it? Pretty simple. And then, all right, so let's take a look at this one. On this one, did this bar close lower? It closed lower than the open. Is the bar red? I pass. I don't do anything, okay? That's the entry technique on it. And I'm just trying to hold it. I'm looking for a continuation from, the end of the day. The last hour usually trends decent, okay? Sometimes it does, sometimes it doesn't. But I'm trying to systematize a set of rules to say, okay, 3 o'clock, let's see if the last hour is going to be strong and go in the same direction or weak, okay? So now this one
It's just that bar, 5-minute bar on 3
at 3 o'clock or 3:05, whichever one you want. All right. I'm just trying to make it so I don't. Oh, last hour start. I'm trying to set up a setup. This is how you get a setup. This is how you get another setup. You start messing with stuff like this. You're like, all right, 3:05. Here's one of the entry techniques. And then, yeah, and the more and more I refine this, I'll start adding stuff to it or taking stuff away and stuff. But like right now, it's all right. I mean, I'm not totally happy with it, but at least you guys want to know another setup that I'm trying to develop up that's going to give me a little more consistency at the end of the day. So now on this one right here that we're looking at, the bar closes higher than it opened, and it's red. What do I do? Nothing. I pass. Okay? So it kind of keeps me from killing myself. This bar here, this bar here closes lower than it opened, and it's red. I go short. Okay? And it did work out. All right? You can use 3 or 3:05, and then I'm just going to fast forward through some of them. You know the entry techniques. I mean, a 2-year-old could do this one. All right? There's a ton of examples. I didn't cherry pick any of them. I mean, there's a ton of examples. All right? So now, on exits, if you guys want to help me develop it up on exits, you can. I mean, I'd love to have more minds on something, the easier it is to figure it out. So here's what I'm playing with now. If I'm short, like here, I'll just scale out. I'm just looking for the last quarter exit. I don't have it perfect yet, okay? And what I'm doing is I'm doing it on the TTM color change, okay? On my last quarter. On my last quarter, you know how I'm usually discretionary, and I'll be like, I'm trying to make this trade purely rule-based. So if you guys have something or you mess around with something, even if it don't work, tell me about it and send it to me. I'll say, well, it doesn't really work. Or if you say, this looks interesting, it might have some potential, but all right, let's add that. We'll mess around with it for 2 or 3 months and then be like, that does add some value, okay? So on this one, on my last quarter, I'm trying to scale out. I'm trying to hold it until the TTM changes, okay? I think this is the way I've been doing it lately, this is a 2-minute chart. So I get in on a 5-minute, and then on this 2-minute chart, when the TTM changes from red back to blue, I get out on that last quarter. The other scaling issues or scaling out are the exact same. 10 points. Yeah, 10, 3, 3, 10, same thing. Does everybody understand the trade? It's pretty simple, but I would love to have y'all's help on, I don't even care if it's indicator-based or anything. It really doesn't matter. I'm just trying to systematize the last quarter. And if we want to mess with the entries, we can. This is just one that I'm beginning to work on. I have been trading it myself. I don't really call it out in the room because I don't have it to where I'm really, really confident in the last quarter exit. But it works good. I mean, it's real simple and easy. Another example, okay? I'm long there, and then I exit. And you can just go through the exits there really. Here's an exit signal here, exit all. So I'm long on this one. This is a 2-minute chart. When the TTM changes, I think on this example I'm showing the TTM on a 2-minute chart has 2 reds instead of just 1 red. But I'm trying to mess around on the last quarter, to tell you the truth. So I don't want to say it's rock solid science, but that's pretty much what the end of the day trade is. Pretty simple.
But how did you notice that bar was significant?
I just messed with it. Really, all I'm trying to do is you notice things like the market moves in threes, different Fibonacci's hold or don't. Time and sales moves in a different direction. So what you are is you're a weather person or a weather man. You get paid to recognize patterns and manage risk. So on this one, I was saying, man, at 3 o'clock, usually either finishes up or down. And if it's a sideways day, there's no real direction. But usually the last hour finishes strong, a lot of times. So now I'm just trying to develop up rules that will allow me to enter it more systematically, okay?
In the 90s, I was calling for a quote at 2:45 and 3 o'clock. And if there was a significant trend, I would just enter the market in the direction of that trend and exit murder on close.
Right. So yeah, same type of thing. You're trying to take advantage of like institutions and people just mess around last
I didn't have this stuff. I was working, so
exactly.
Get quoted.
Exactly.
I missed it. I just stepped out of the room. Is this all on a 5-minute chart? Or
the entry's on a 5-minute, the exit's on a 2-minute. Yeah. Yep.
There's 2 plays that are left, and I just want to cover them real quick in case you guys have any questions on them. They're pretty self-explanatory. This is a box play. I do this primarily in Forex. It does work in other markets, but it's primarily a Forex-based trade. Box play is pretty easy. I'm looking for sideways consolidation. Okay, that means you get one test of the at least 2 tests of the highs and 2 tests of the lows, and then when that happens, I just place a buy stop above the consolidation and a sell stop below the consolidation. So all you're doing is you're looking for a period of consolidation. Okay, when the markets are consolidating, they're building up energy and things like that. Place the buy stop and the sell stop, and it's easy. The target, whatever the width of the box is. So if the box is 15 pips, then your target's 15 pips. Okay, and I found this to be a pretty high probability play. You can see here when we break out, we come up, come back down, and then hit the target. Okay, so where's my stop? You've got my buy stops here, sell stop here. When I'm filled, I just leave my sell stop in place. Okay, I'll just look at another example. All right, so here we got consolidation. Again, what defines consolidation? You're gonna have a high mark here, and what happens? I just start moving these horizontal lines around. You don't know if it's gonna be a box or when, and generally you're gonna see it. You'll be able to flip two charts and say, oh, is that a box? And you can line up the lines. So once I have 2 tests, once I got 2 tests of the highs and 2 tests of the lows, I'm then able to place a buy stop and a sell stop. This box is 34 ticks wide. So what's my target on a breakout? It's 34 ticks. My sell stop stays in place to be an actual stop if that would reverse and stop me out. So about a 1-to-1 risk-reward ratio. Okay, pretty simple play. Any questions on it?
Yeah, it's going to be 2 tests of each.
Yeah, I'll just show you one more example.
So you do that in the euros.
This is a good one to do on the EC. I follow it mostly on the euro, the EC, or the euro-dollar cross, and it works generally good. I found it's a pretty good Forex play overall. Again, here's a test of the high, test of the low, retest of the high, retest of the low. Now we rally back up. You put your buy stop, and I put my buy stop 1 tick above the highs, sell stop 1 tick below the lows. And now sometimes you're going to have like a wayward line. So what I always do in that case is line it up with the one that made the initial low. So you may have a wayward line here. They're not going to set up perfectly. So then once I have that, we come back up here, almost get in on a buy stop, but it doesn't quite break through. Then we reverse, come down, boom, we're in. This is a 15-minute chart, 13 ticks, you're out.
So there are less head fakes on the euro here than on S&P?
Yeah, I don't do this on the stock indexes. I found this is a very good currency play. For breakdowns and breakouts, I much prefer the currencies as opposed to like the S&P and the stock index futures. Okay? Any questions on this one?
15 minutes.
Yep.
Just 15 minutes.
No, any time frame. Actually, I got there's a daily one on here too. Okay, here's a daily one. Test of the lows, test of the highs, test of the lows, test of the highs. Put in the buy stop and the sell stop. We come down. You can see we come down halfway, come all the way back up to break even, then boom. This is a 312 pip box, so looking for a 312 pip target. So any time frame.
Including 1 minute.
You can do it on 1 minute. The problem with 1 minute is most of the boxes that form are like 5 or 6 ticks wide. So it's not, you can play it. I don't actively look at 1 minute. I prefer...
Reading the last note, it said 1 minute boxes. So I'm just going to cross that out.
Yeah, I mean, I generally, if you're scalping, you can use if you're really scalping it, 1 and 5 minute. For me, currencies, I'm looking for plays that are at least going to last a couple hours, so I'm doing 15 minutes and above. 15, 30, 60 for intraday. And okay? All right, and then the other play is a 352 play, which is on page 464. This is one that's kind of my favorites. I figured this one out I was sitting at a trading desk for about a year. It's kind of a hedge fund kind of a thing, trading futures and stocks. And I had this unique vantage point. I had a desk like right here, and the sea of traders were just kind of sitting out here. And I could see, the way I was lined up is I could see everybody, because the desks were like this way, so I could see everybody and their reactions. It was like looking at the pit. And what would happen is I noticed a lot of people were always, and this firm actually taught the 330 reversal. And the 330 reversal would take place, say the market would bottom out and start to rally, and all these guys would be sitting here wanting to play the reversal, right? And a lot of them would wait to make sure that the reversal was going to work. So what happened is I'd see all these guys, there'd be a 3:30 reversal, and they'd sit there and wait and wait and wait, and finally they'd jump on board. I mean, I don't know why, they were all kind of nervous Nellies about it. And by the time they jumped on board, it was usually about 3:40, 3:45, and at this point, they'd sit back and wait. And then more often than not, I'd see that they'd lose money, and I'd see how they'd react to this. So what would happen is you'd come down to 3:30, they'd get the reversal, they'd wait 10, 15 minutes, get long, and then the market would kind of start to fizzle out, and they'd start to, as we got into the close, I could tell that they were underwater on the trade, because you could see them just going, POS market, blah, 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 blah. You could tell by the reactions that they were feeling pain. Well, what would they do? They wouldn't do anything about it. They would just stay in and wait until as late as possible into 4:15 to get out of their trade, thinking it might go back in their favor. So now what would happen is you have this big room of traders all stuck in the same trade, and now they're going to try to get out. They're hoping that in a thin market that it's going to go in their favor so they can get out. And then what happens is about 4:08, 4:10, a couple of them start going, well, to hell with this. And they're getting out at the market, at the current bid, in a thin market. Well, that starts pushing the market down, and you could see this happen, and it would push the Dow down 20 points. Okay? So I just started sitting there doing the opposite of what they were doing. 3:30 bounce would come, they'd get in late, and then I found around 3:50, 3:55, it was a good time to go in and fade what they were doing. Okay? So how does that work? 3:30, here's the bounce. They're all buying they start to buy in here about 3:40, 3:45. They're nice and comfortably long. We're sitting here consolidating. I'll short. And then all these guys that bought like here and are starting to get underwater, now they're waiting for the last 15 minutes of the day to bail them out. And the unique part about this is that all these guys had to go home flat. So by 4:15, they had to be out no matter what. They didn't have the luxury of time. So now they're in a squeeze. They got to make a decision. Okay, they're waiting, sell, crap, they're out. I cover for $1.50, 0.50. Okay, we'll look at a couple more examples. Now this doesn't.
You would sit out on the bounce though. You wouldn't go long on the bounce right at 2:30.
Yeah, actually, I mean that's a different play. I mean doing the 3:30 reversal is a good play, and this is a fade of the reversal kind of a thing. I mean it doesn't work every time. I mean here's an example of one that didn't work. Lost half a point. Okay, here's another one. Now 3:30 we rally. 3:52 I go short, and I literally just stay in until the minute before 4:15. So 4:14 or so I just cover at the market. Boom, plus 150. Imagine now all these people who bought and tried to buy this reversal late, they're all stuck here. They're hoping that they're all throwing out offers at 1095, 1096, hoping that it'll come back and take them out of break even. When they see now it's cracking, they start selling, which forces the market lower, lower, lower. You got a thin market, you got people who are trapped. Let's see here. Another example. We rally off of 3:30. You got people who are jumping in late. You short it. Not a big. This one's just a scalp. It turns out to be a quarter point. But you can see the dynamics. All the people who chased it late fizzles down. Let me find some Dow examples.
So what happened today?
Yeah. We had the rally off of 3:30. All the people that are jumping in late fizzled down toward the close. And every time I do this play, I always imagine this room full of traders, okay? And you can literally, you could see the money, actually, and a couple of guys caught on. We were talking about it, and so I could see the 4 guys that were doing it and me over here, and literally you'd see all these guys screaming and crying, damn, shitty way to end the day. You could almost see the cash flowing from their accounts into the guys that were doing that. It was pretty funny. All right, so here, 3:30.
Do you expect to last over time, or?
That's a great question, and it's one of those things that I've actually got this play in the book. I got the book coming out in January, and this is my big test. Actually, this is one of the ways I'm testing my hypothesis. Is that, and I'm still debating whether or not to pull that play out because I've got another month to decide. But I'm testing is that if it comes out and everybody starts to do it, I want to see how that affects it. And you guys are in the know that maybe then it's you fade now it's going to be a fade the fade. Now I'm not doing that to be malicious. I'm literally just curious. I'm like, would that work? So this should work good until January, and then and actually, but I do say that in the book. I'm like, look, guys, this is a trade. No. I'm not just trying to like, hey, let's write a book and then fade it, and then that's great.
There is a trade you need to take out of the book, though.
Which one? Tick fades?
You know. Yeah.
But you know what? That's been around forever, and everybody's chicken shit about it. I mean,
That's a good point. You're right about that.
That's the other thing I don't mind sharing trades is because I'll share trades, and 100 people sitting there watching them. The first trade that people do, 30 of them lose money on it. They never do it again, and then the rest of them just try to tweak it to the point where 2 weeks later they're not using it anymore, kind of a thing. It's like CanSlim. I mean, CanSlim is a great way to invest in stocks for the kind of a swing type of thing. Everybody that reads it, they get excited, and then they start tweaking it to the no. I mean, William O'Neill, he'd always say that. It's like, I asked him about it. He'd go to his seminars in the 90s. He's like, I'll teach everybody this because I know only 2% of you are going to follow it. All right, so another example, 330, we sell off. People are starting to short. You get in. Now, my favorite ones are when people are stuck short because people tend to panic more when they're stuck short, and they start buying. So if I can get a decline in the 330, I'm all over it. Boom. And generally in the Dow, because it's such a thin market from 4 to 415, now, even though the Dow closed at 5, past 415, I'm out because that's when the S&Ps close and everything's going to die anyway. Generally, though, if you're going to get decent moves in the Dow, you're going to get more exaggerated moves. So here's a 21-point move. Now, these don't set up every day because what will happen sometimes is you'll get like the sell-off from 330, and then by 352, when I take the trade, we're actually back to that level. That's no trade. So we're within like 10 points of where we were at 330. It's no trade. Okay, but otherwise, I'll get in on the Dow. I'll use a 20-point stop. On the S&Ps, a 2-point stop, and my target is 414, meaning that at 414, I get out at the market. Okay. Another example, 330. We sell off. 352 go long. Just grind higher. And you can almost see people just out at the market, cover, shit, damn, out, 12 points. Another example there. I'm trying to see if I've got one that's... Yeah, and these are actually my favorite moves here. You get a nice sell-off even before then, and what will happen is like right here, you're gonna have people jumping in on the short side, panicking. They want to get their last trade of the day out of the way. Boom, come in, step in. They all get stopped out. You go to Starbucks. Another example here. 330. Let's see. I thought I had one on the Russell. Maybe not. Here's a rally. And sometimes it's a little scary because you're going to get sometimes a pretty decent rally. But boom, you step in short. You got your 20-point stop. This one goes 10 points against me. And then you have people that are buying the top. Oh, getting out. Oh, thank God, it's coming back up. Oh, shit, damn. 12 points. Okay? Any questions on that one? But anyway, I hope you guys enjoyed it. Safe travels on the way back, and thanks for coming in, everyone.
I really enjoyed visiting the floor today. I like seeing you do all your setups in person. Pretty much enjoy everything about it.
What did you not like?
Just the time involved in the video process.
Okay. What would you like to see more of?
More of?
From me and John.
I think you guys are doing a pretty good job.
The thing I like most about this, you and John and the seminar in particular maybe, but you do things differently. You're not coming from one single program.
Okay.
You do short-term stuff that works real good for me. John does a whole lot of stuff that, kind of iffy. But no, I really like the fact that you're not clones.
Hi, this is the best seminar I've ever been to.
That's my money.
I feel I could trade that. After the second day, I feel like if I had the indicators in front of me, I could trade the next morning.
I like all of it. Probably the brakes, but the length of the brake was probably.
The brakes need to be shorter. Okay.
That's about it, really.
Well, I'm here. I'm for second time, so for me, Like first 2 days were like, okay, so. But I can tell that my head is much more clear. I do have more confidence in me. And the negative side for me personally was I thought it's a waste of time to have showing people how to use TradeStation. Because I think everybody can log in and, find out how to, But otherwise, I really enjoyed it, and the floor, that's amazing. So.
I like the setups, how you went into a lot of detail and how some of them worked. I bought, I think, one of the first CDs, and I went through it, and I didn't feel comfortable with it. But
Okay, like an online semi CD, okay.
Right. But being here and being able to ask questions about how you actually get into some of the positions.
So you like the live one as opposed to the recording?
Yes, you can ask questions, and you guys back up and go over things and make it very clear.
Okay.
And I like the tour of the floors. That was very educational. And the same complaint everybody else has about the length of the breaks. But other than that, this was the best seminar I've ever been to.
I really loved the seminar. It was just a great experience for me. I like the fact that you guys are full-time traders and you're making money. So, this is a chance for me to come and see what you guys are doing and to talk to other traders also. So it was a good chance for me to model you guys. You guys got different styles, a lot of different setups that I can pick and choose, what I feel will work for me and to experiment with. So overall, I thought it was just a fantastic seminar.
Yeah, I did have a couple of ahas. My first aha was getting the opportunity to meet you and John, and it's a hell of a great aha. You all work together very, very well. I'm so impressed with the way you've put the seminar together, the scope and depth of all your presentation material, how you've presented it, crystal clear, absolutely fantastic. I actually, the people that you've associated yourself with to let us get to go through the CBOT and the CME was really, really almost an emotional experience when you got a chance to walk into that pit today. Well, well, your vendors that you brought in, you brought in Ben. Yep. Absolutely incredible. I'm going to take his service. Pat, I do business with. They're a credible service. And John, I like the way he expresses himself and how he has helped us get into the pit. But today, walking into the S&P pit was really a hell of an experience. I mean, the noise that hit you when you went through the door, it was a triple aha and then some. But beyond all of that and the people that you put and how you put the seminar together, I've really learned a lot of things that are going to help me measurably in my trading. The gap play, I think, is something I can use, and I think it will pay for the cost of the seminar the first day I use it. And I really appreciate the opportunity to come.
Well, I really enjoyed the whole seminar too. I like how Hubert is spontaneous and funny, and I like how John is systematic and has a lot of experience. So these two guys really fit together very well. I had almost every single thing that I was over here told was almost an aha for me. I used these things for a while, and I know they work. They work very well, and just a matter of time to put together. And one thing that I learned is that psychology is really the most important. Once you have a losing trade, it's really the best thing to just go for a break. Go to Europe, go somewhere, take a week off. And just come back and just play the game again.
I greatly enjoyed the seminar. I like the way you guys are real. You're very informal, and how you want to help people. That really impresses me. And several ahas here for me. I'm going to start watching the internals a lot more closely. The setups I really enjoyed. I needed that. I've had the CDs, the setups for a while, but it helped me gain confidence here, seeing how you use them and everything. So it's been great.
It's one of the best conducted seminars, and I came here mainly for the pit experience, and I think that was the biggest aha I had. and it definitely will help me trade the futures.
How did it help? I mean, you did like one of the mentorships. Did this kind of either just kind of clarify anything, or was it
Yes,
just more some
it
of a
did.
repeat?
It definitely clarified a lot of points in there.
Okay.
And when Hubert explains that on the hot com, I know what's going on now.
Okay, very good.
Just quickly, I really appreciate being exposed to two totally different approaches to the market. Hubert and John's have totally different approaches, different time frames, but they're looking at the same thing. And to see the successful approaches to trading from such diverse approaches is really helpful to me. So that's a big thing I've always taken out of from John and Hubert's teachings. Thanks.
How do I start? I guess I'm going to start with what I didn't like first. I mean, obviously, I'm clearly devoted to the trade the markets approach, and that's because John and Hubert, I think, are really authentic. I've seen a ton of trading teachers, and I just think they're for real. I wish the breaks hadn't been as long. But the reason I wish that is so that we could have done pit noise. It would have been cool to have done pit noise a little bit every day, or not pit noise, tape reading. But they go together, obviously. Because it is a really tough thing to learn. If we maybe had been able to do a little bit of it each day, we might, I would have liked to have done that. I will say, having done an online seminar and having done a mentorship, I did feel like I knew all the setups. I've been through all the material before, but it was like when you get it in college, like when you're going to walk into a test and you know that you're prepared, it just came together, sort of hearing it the second or third time in an organized way was worth it for me.
Yeah. Coming here, this is the second time I've taken the seminar, and it's always good to not only see the material again, but of course, John and Hubert, just fantastic. I mean, they're the real deal. It's great to go ahead and see Hubert make a whole bunch of money in his spare time while John's talking. That's what I'm saying. As John's talking, Hubert's making more money. And also, I think it's great to go ahead and see the other traders, talk to the other traders that are here, get the experiences that they're going through, what they're doing, what they're trading, how they're doing it. And I think that that's also an added benefit on top of the class.
I was at the Denver seminar, and yesterday John asked me what I thought, and I said, well, things are a lot easier the second time around. At any rate, I also liked it that we weren't as rushed. I know we took a lot of breaks, but I felt the Denver seminar was all crammed together. We didn't take any breaks.
Yeah, that's true.
At any rate, I appreciate all your efforts to try and work with us, and even individually in such a large group, because having done a lot of teaching, it's quite difficult. And I've learned a lot, and I hope to continue learning and get a good. I need to get a good business plan together.
Well, I knew a little bit about the indicators and the kind of setups that you used before I came here. But having them explained firsthand, I think it's really helped us a lot, and I've got ideas to go away with specific setups and to play on them rather than to play on my emotions, which I think I've sort of been doing up to now.
Do you think that, in terms of your trading right now, your biggest thing is, I mean, I know as an emotions-based trader, I know how you felt when you realized you left your laptop up in the suite. Is that, I mean, is that kind of a similar thing that you
Yeah.
filled out when trading and stuff like that too?
Yeah, I think my biggest problem was entering trades, not sticking to a specific setup or two specific setups or whatever, and just playing on emotion of where I think the market's going and chasing and everything you shouldn't do.
Gotcha.
So I think if I take anything away, that's what I'll kind of take away, just using certain setups. I think the biggest thing for me is that I've had a great time. Really enjoyed Chicago, really enjoyed visiting the CBOT and the CME. Met some great people. I've just had a really good time.
Good.
Well, I actually came here for my son, my teenage boy. Brought him, and I appreciate you having him here. And he's excited because he wants to do the gap plays now. I've had him to many seminars. It didn't seem like he ever learned anything. And now he's excited. And that makes me happy, and I learned quite a bit, too.
Okay.
Very nice.
Susan, okay, so I know you sent a lot of emails coming up to here. Your trading journey, you're at a point where it's like, okay, you got to figure out how to make this work and things like that. So again, good and bad, things that you learned, stuff that you wish you learned, stuff
in
like
my
that.
trading, I think I am in the dawn of my trading, the darkest moment of the night before the sun comes out. And I think this really put it together for the sun finally to come out.
There ain't no sun coming out tonight.
Well, no, it doesn't matter. I mean, I can wait until Monday.
I can tell that y'all are real traders because you're very patient, and I've appreciated all along your patience with my questions. I mean, you never say we've been over this once or twice. I mean, except for Susanna, you've been very patient. Yeah. But I will tell you that I think that patience is my aha, because I probably have my darkest moments in trading have been from impatience and trying to make things happen when they didn't, try to get things like they were last week. Also, the depth of the business plan that you present is also an aha. It's part of a rules, standard operating procedure. I mean, every business has to run on those things. And, Hubert, I think you mentioned that to me once before, that in your entire business career, you had a standards, policies, and checklist and what have you. John seems to implement that maybe a little more. But, that has been a real eye-opener here for me.
Well, I came here looking for foundation, reinforcement of what I really wanted to learn from you guys, what I'd been practicing, watching you guys for the past 6-8 months.
Yeah, you've been in the room, so you know.
Yeah, and
it helps now.
Oh, absolutely. I've been exposed to it probably 8 months, and a lot of it's redundant, but this is where it really gels is when you come to an event. Perhaps watching the DVD can do it for those that can't make it, but for me, I wanted to come to a live event, and I can recommend that because it really just makes it all develop and become more clear. So I got exactly what I came to see and learn, and it was really nice to meet you guys too, both of you, because up to now you've been kind of disembodied voices, and so it's really nice to get some time to spend with you guys and ask you one-on-one questions. And
it's vice versa too. It's always nice to put a face to the to the room name.
I guess I came as my first real exposure to you folks, and really enjoyed it. My expectations were set by the videos that you've been sending out, which I found to be very informative and gave me a good grounding to be able to know some of this stuff and its basics before I got here. So that was really good. I think the big aha for me was the way you folks work together, and I came away feeling like you wanted to improve me as a trader, which was, to me, that's what it really gets down to. That's what I'm here for, and the fact that you guys both came across as trying to help me out, and help all of us out in our trading, to me was the big aha, because sometimes you don't associate that kind of empathy with folks who are in the pits all day. And again, I didn't have any real prior exposure to you. I suspect one thing, I won't talk about all of the stuff other folks have, but one thing that might help a little more is an expansion on what your daily routine is like, what your weekend routine is like. You probably just need to expand the business plan a little bit with, 5 or 10 minutes of additional discussion that would satisfy me. And then perhaps as you're going through the day, you started out, I thought, with a great foundation with the indicators and then a couple of sequential plays, that how you start your day. But one of the things that's not apparent to me is how do you look for setups? I mean, we've got 17, 18 different sections on plays, and I knew we would get that basic information, but how do I filter that as the data stream is coming?
And I'm glad you asked that. And I guess, and two quick questions. I mean, it's the first is the part about the trading day and stuff like that. That's great feedback. I mean, that's something that we could even do and add to the DVD. Just sit down, we can talk about our trading day. Secondly, In terms of the setups, a good question is, hey, John Hubert, do you trade 17 setups a day? No.
Right.
Okay. These are setups that we found that have worked, but actively I'm looking for 3 or 4 a day.
Right, and
okay?
that feedback on how to filter them would be helpful.
Yeah, and so part of it I think is just kind of finding it seems like sometimes the market expectations are that this play will work very good. I mean, right now what I've been doing for like the last year, gap, and then pivots with the combination of that chart that I showed you with the squeezes, the scalper buys and sells, and tick fades. I've done those for years and years and years and years. A lot of the other ones I'll kind of come in and try them out, but that's my stable, and that's just kind of what I'm focusing on. And it's a good question because you really don't want to be looking for 17 different setups.
Right.
The idea is that what will happen is that you'll find some setups will fit your personality better than others, and so you pick those 3 or 4 and then just focus on those. If another setup fires off, that's okay. And so it's kind of like, here's all the setups that we've used over the years that we like. That doesn't mean we trade them all every day.
Right.
But we can't tell you which ones we're trading now. If for some reason, pivots aren't working, or if the markets are dead, I'm going to trade clack, I'll do a ping pong play. But really, it's the internal indicators and the first couple of setups that we went over are kind of the main core ones, and then here's some peripheral ones for people who are looking for additional stuff.
Right, a little bit of that decision process would help us.
Gotcha.
One last thought would be, we had a little bit of trouble with the PCs. God forbid that would have happened for a longer period of time or in a more serious way. So I hope we have adequate backups and
that's a good
future
thought,
loans.
yeah.
I enjoyed the seminar immensely. I've been in the live trading room for about 3 months. And as it's been said here, it really gelled my whole experience with the setups, the indicators, meeting the both of you. But really what I found out about coming to Chicago is it's a great city. One of my passions was to get on the floor, both the CBOT and the CME. And, to share a room for a few days with 40 fellow traders that share the same exact passion as I have was, again, overwhelming. So I really had a good time.